Imagine investing $500 in Monster Beverage in 2005, a return of 25,000%, worth $126,000 today, or that same $500 in Amazon for 25 cents a share in 2002. Making you over $365,000 in the last 20 years. That is the power of getting in before the crowd, before Wall Street wakes up and the mainstream media catches on. Now imagine doing that again and again and 5 times over. That's because I found 5 stocks that could produce that same kind of life-changing returns. The tech disruptors with the potential to turn a small investment into a fortune. I'm going to show you what to look for, how to analyze these stocks, and how a $500 portfolio will change your life. Getting us started, one I just started following, OneStream, ticker OS, issued shares last year and is disrupting the world of finance. OneStream offers a unified AI platform for finance, aiming to do for the sector what Salesforce has done for CRM and ServiceNow in IT. With this, the company wants to take finance out of that traditional, backward-looking role, just keeping records, and into a more strategic role within the organization. Folks, it is this kind of disruptive force that we're looking for in these high-growth investments. Companies that are changing the way we do things and are going to have that first mover disruptor advantage. And the potential market here, something I'll show you how to analyze later, is giant for this one. OneStream booked $568 million in recurring revenue last year, a fraction of the $10 billion market it could replace, that old way of doing things. But even that is dwarfed by the $50 billion opportunity in finance and operations. On just a fraction of that market, this stock is going to bounce higher than when the trampoline park started serving Red Bull. OneStream has the partnership ecosystem to help deliver that product, building out relationships with consulting firms like Accenture and IBM, tech powerhouse Microsoft, and growing its developer community. Sales are expected to continue at a 20% pace, growing to $700 million next year. This one is surprisingly profitable for a new company, already reporting positive income per share. Now, on that kind of growth and profitability, shares are fairly valued here at 9.5 times on a price-to-sales ratio, but this is one you cannot wait to be cheap because that growth is going to take it higher over time. And this next stock just recently gave investors a second chance to get in on a huge growth story, but I want to show you how fast these stocks can change your life, how easy it is to grow your portfolio on just $500. And that's because you wouldn't think $500 could buy you a house, not at the median home price of $416,000, even the $403,000 median price down here in Tampa, Florida. But I'm about to show you how to turn that $500 into your dream home. Together, these 5 stocks are up an average 128% over the last year, more than double your money. And well, I don't want you to think that they're going to do that every year. Each of these has 30% plus potential for years to come. And on that, investing just $500 a year, less than $42 a month, pays off your house, no debt in 18 years. But reach just a little more. Invest $500 every 3 months, and you shave more than 4 years off of that. Just $166 a month will pay off your home in a little over 14 years. But really take advantage of those returns with $500 a month. And you're living the dream in just 10 years, while your neighbors still have 2 decades crushed under their mortgage. And nation, when I first started investing while in the Marines in 1999, $500 felt like a fortune on a corporal's pay. And I know it's still that way for a lot of people, but do what you need to do because that $500 can be the down payment on your financial freedom. Back to our list of stocks, and shares of GitLab, ticker GTLB, have plunged lately, but along with the growth, have a huge vote of confidence from one tech giant. GitLab is an open source code development platform for security and IT operations, free for individuals, but through plans for multi-user and enterprise. And if you've heard about coders using AI to help them develop code, GitLab is one of the most comprehensive tools being used, helping those coders deploy faster and with fewer operations. That toolset helps drive return on investment for enterprise users and a payback period that has helped the company grow to over 9,300 enterprise users in the most recent quarter and 1,000 users above the $100,000 revenue point. I've highlighted shares in the past as one of Alphabet's largest investments, digging into the Google parent's 13F disclosure of stock investments. Alphabet has owned shares of GitLab since before it was a public company, investing in the startup. And while it did sell 3 million shares recently, GitLab is still Alphabet's largest investment by a big margin, with a 3.7% ownership of the company, worth almost $300 million. Revenue is growing at that 20% plus pace that we'd like to see in these growth stocks, forecasted to over $1 billion next year. And while earnings are expected to stall this year on that higher spending, next year picks up with a 27% growth. And on the recent sell-off, shares have fallen into value territory at 8.4 times on a price-to-sales basis, which is relatively cheap for a growth stock like this. And you can see a big discount to the 13 or 16 times valuation it's traded at in the past. Even on the sell-off, though, shares of GitLab are the highest on the list today at $42 each, but we've got the perfect option strategy for any stock hitting those higher prices. The synthetic long option strategy gives you the same upside in the stock's price at a fraction of the cost. The synthetic stock is just exactly that, a way to get the same payoff in the stock from just options here, and It really shows you the power of options investing. Here you buy a call option and sell a put at the same time, both at the same strike price. I know the math on this can be confusing, so I'm going to show you an example, but this simple strategy gives you the exact same upside exposure to GitLab or any stock, but at a fraction of the cost. We're here in the options available, and I like to use the longer dated ones on these long-term buy and hold stocks. So with the January 2026 options, we can pay $7.10 for the call options at the $42.50 strike price, but then collect $6.70 a share by selling the put options. This gives us the right to buy the stock at $42.50 over the next 7 months for just 40 cents a share. So just think about that. Instead of paying out nearly $4,200 for 100 shares of this stock, we get the exact same upside for just $40. That 40 cents per share. And it's just like that. $40 gets you all the upside to 100 shares of GitLab or one Starbucks coffee and a muffin. And that's just one of the 29 option strategies I use to amplify returns and create income. Now, I know options can be like a foreign language though. So to help you get started, I'm relaunching our Ultimate Options course. Over 3 hours of video, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including a real-world example with shares of Tesla. So right now, I'm relaunching the course at a 38% discount. Save $150 off, but only for the next 3 days. You're going to get all the basics to help you get started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. That $150 launch discount is only available with the coupon code I'll leave in the link below, so look for that or scan the QR code here. Back onto our stocks to buy though, and you out there in the nation know SoundHound AI, ticker SOUN, is one of my favorites with over 100,000 invested in the stock. The SoundHound isn't trying to be another chat GPT copy like Anthropic or Claude, but is focusing on the voice AI level, the next step technology that is going to bring AI into your everyday lives through voice assistants. SoundHound has been developing its speech-to-meaning engine technology for more than a decade, and instead of converting the voice to text, then analyzing the meaning, like a lot of companies are doing, SoundHound's platform interprets that meaning directly from the voice, faster and with fewer errors than real-time environments. And from basically nothing, this could be a $160 billion market within the next 2 years, with SoundHound dominating that theme. Now think about that. The company booked just $45 million in sales last year, but is set to carry a controlling share of a $160 billion market. Sales are expected up 80% this year, 84% next to $152 million, and this one just keeps on going. The company has already landed partnerships with Hyundai, Mercedes-Benz, MasterCard, and White Castle, integrating its real-time voice assistant into cars, payment terminals, and drive-thrus. Real applications that are bringing AI to the real world right now. So the upside to that $160 billion market, and what is still a tiny, tiny company right now at just $3.9 billion market cap, is immense. On even a fraction of that market, 5% market share for $8 billion in annual sales, and a valuation multiple of 10 times. Would mean a $198 share price and a 20 times return on your money. The quantum stocks theme is hot right now, with leader IonQ, ticker IONQ, up over 400% in the last year. I recommended the quantum computing stocks in a video April 30th, with group up 94% since then, but this is one of those themes you need to be willing to ride out the bumps. It is easy to understand the upside here, a market that could be worth $173 billion by 2040, and really a revolution in computing that defies valuation. But then the chart on these looks like the lunch launcher at Six Flags. And while I've highlighted QUBT as a great stock in the group, I also like IonQ for its size and its head start in the industry. Its trapped ion technology offers high qubit fidelity and connectivity, a distinguishing feature compared to others like IBM and Google using superconducting qubits. IonQ's patent portfolio, nearly 400 quantum networking patents, has helped it grow quickly and sign contracts with major partners like the Department of Defense and SK Telecom. Amazon sees this as well, holding 1.9 million shares of the company. It's not a large ownership position, but does tie the two companies together and gives IonQ some shared credibility along with a potential buyout in the future. And while just $43 million in last year's revenue makes it tiny on this list, it's years ahead of other quantum companies. In fact, with sales expected up 95% this year, it tops any other quantum computing company by a factor of 8 times on revenue. And we've got my top pick for growth stocks next, one already up 62% since recommending it in March, and in which I've invested $165,000 myself. But before that, I know this channel isn't about just dropping a list of stocks in your lap and saying, go buy these. Nation, I want you to be a better investor, to be able to find these kinds of life-changing stocks yourself and not depend on some Yahoo on YouTube for your financial future. Now, the CFA curriculum I studied is a black hole of analysis from which nothing escapes, and you can go blind modeling cash flows your first year as an analyst. But the truth is, you really only need 3 measures to find and analyze these moonshot stocks: growth, addressable market, and cash flows. And most important, right there in the name, growth stocks. How fast is the company growing its revenue? Eventually, every company has to convert those sales into earnings, but for these kinds of disruptor stocks, it's sales growth that takes the price higher. Here you're most interested in that future growth. Do analysts think the company can keep up that 20% plus growth that we want to see? And here you can find that under the Analysis tab in Yahoo Finance. Of the 21 analysts covering OneStream, the average estimate is for 20% growth this year and next. But then again, we know analysts can be all rainbows and unicorns about a stock, so we want to make sure the company has been able to do that in the past as well. And here we see OneStream grew sales at 30% last year and 34% the year before. But then growth isn't enough if the company hits a brick wall in demand for its products. So you also want to check out what's called the total addressable market, the TAM, or how big the company's market opportunity is. For example, OneStream is targeting that $10 billion legacy replacement market for financial management, alone a huge opportunity compared to its $568 million in current sales, but it could also expand into the $50 billion operations market. And the size of that market opportunity is so important because few companies ever control more than 5% of their market. So you want to make sure that even that's going to be enough to 10x a company's revenue and its share price. And before we get back to our list, cash is like oxygen to these fast-growing companies. Many of these are going to be posting negative cash flow as they spend heavily in research and development and to boost sales, like we see here with SoundHound AI. But you want to compare this ending cash position against that operating cash flow and the free cash flow below. Does the company have enough cash on hand to pay for a couple of years of cash burn, survive until it reaches profitability? My top stock, when I have over $165,000 and am still buying more, shares of Symbotic, ticker SYM. Now, if you've been watching the channel, you saw me recommend Symbotic on the 13th, less than 2 weeks ago, with the shares already up 33% in that time and still ready to run higher. And like all the stocks on this list, it's not that 30 or even 100% return we're looking for, but the 1,000% return and more, and 10 times your money. And Symbotic has that potential. The company builds AI-powered warehouse automation systems, a combination of software and robotics that is going to transform the $3.9 trillion legacy logistics market into an efficient, real-time fulfillment machine. The company's core tech includes fleets of autonomous robots, machine vision, and AI that handles that picking, sorting, and palletization with the speed and precision that no human operation can match. Think of it like this. Amazon spent hundreds of billions of dollars building out its own robotics distribution system, but Symbotic is giving it to the rest of the world, all without the need to build it in-house. It's already signed a 10-year deal with Walmart and is on the distribution centers for Target and grocery chain Albertsons. It's all part of a $1.2 trillion market in the United States alone, and I think that's just the beginning. Not only is the potential there for Symbotic to expand internationally into that $3.9 trillion global logistics market, but it's also recently taken over Walmart's advanced robotics unit, giving it access into delivery robots as well. That means Symbotic is developing all of Walmart's warehouse and its delivery robots, and is going to take that technology everywhere. And the company's moat here, its advantage in growth, is that it isn't a one-off service. It's custom engineered solutions and deep into the DNA of a company's warehouse operations. Once installed, it controls everything from inventory, flow, and fulfillment. Switching that out wouldn't just be costly, it would be operationally disruptive, which means Symbotic not only sets up those operations, but benefits by recurring revenue in that $500 billion warehouse as a service segment. The company is expected to post 21% sales growth this year and 31% next, but to put this into perspective, even to $2.9 billion in sales next year is still a fraction of where this is going. Symbotic already has a backlog of more than $23 billion in orders, revenue that's just going to keep up that growth of 20% plus, but it's just getting started as it dominates the $1.2 trillion US market and beyond. Now, the stock at a $17 billion market cap trades for 9.4 times last year's sales of $1.8 billion. On this kind of growth, that revenue reaches $36 billion over the next 10 years, and a $360 billion market cap, or a $602 share price, for 20 times your money. Get your $150 coupon and see how I use options investing to boost returns, lower my risk, and create income with our Ultimate Options course. Go step by step into 29 option strategies, get the option calculator, all with a 14-day risk-free trial with the link in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.